Welcome to the Crypto Nest. All right. So first of all, today is supposed to pass, or no, they're supposed to vote on the Clarity Act. So we'll see. I believe it was going to be a very extremely volatile day. So now, beside that, are things getting better or worse? Are we going to get into a recession or not? So I did do some research, and I think I already presented 2 3 weeks ago, 2 weeks ago maybe, because this I did that research the 8th of May. We are the 14th now of May. So as you can see, the oil was going up, recession data, and blah blah blah. So I tried to compile what's happening, and we kind of have 7 criteria of where, you know, we can kind of gauge if a recession is kind of near or we're far from. So we have the 10 years versus the 2 years yield inversion, and as you can see, it's pretty high. We have the consumer sentiment that's very high. Energy shock, well, that's not a surprise. Unemployment is rising. Payroll negative, very very high. And yeah, the GDP, right? So what are the risks? So you can see that the risk level are very high. Consumer sentiment, when the consumer sentiment is very high, or it's a sign that something more bearish can happen in general in the finance. Energy, geopolitical shock, well, once again, not a surprise. This is high. Inflation, and this was from the data of 2 weeks ago, kind of. So this is moderate. Inflation, moderate. Unemployment, moderate. And Fed policy, they hold the interest rate, so that's moderate. The yield, 2 years and 10 years, is still not bad. And also the GDP is not great, but still not that dramatic. And payrolls. So these were the stats before, and so 12 months recession probability between 30 and 35%. And yeah, so those are the 7 things we were looking, and I think 7 out of 7 we are looking at patterns here, and there's always been at least 2 or 3 things that they were critical, and then in the previous recessions, and so we need to be just aware. And so I ask AI to do the same thing, and a little bit more detailed. As you can see, everything is getting worse. Alarming, worse. So let's go. CPI inflation, it got worse. Core CPI got worse. PPI, well, now it's alarming. Real wages, well, no surprise, the wages are not progressing as fast as inflation, so that's getting worse. Consumer sentiment, new record low. 1 year inflation expectation, this is going to be, well, this is the only thing I think it's got a little bit better, or nearly better. After that, 10 years got higher, the 2 years treasury yield got higher. The 30-year, it broke the 5%, so it's not good. 10 years and 2 years, the only thing I think is maybe positive is that they're narrowing to each other. The Fed funds it didn't change. And you can see everything, it's more negative than positive. And so you can see that since the 8th of May, things have changed. Things have worsened. And now probability for recession is between 40 and 45%. And so now, before it was critical, I think before it was not critical. Let me go. And I think it did add something. Is it? No, it didn't. Okay, so we had high, high, moderate, 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 moderate. And now we're having critical, high, high, moderate, 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 moderate. Okay, so we got one more red than before, and then I think everything is progressing though. So beside those two years and 10 years that it got narrowed, and the payrolls. So the rest, as you can see, is getting worse. I'm not being dramatic, but we just need to be aware that things are not getting better, are getting worse. Now, I don't want to make a long video, so honestly, I think I should close it here. And as you can see, it's not only one indicator or one aspect of the finance in US that it's not shining, but it's many. And so what you should do with this information is just to be more cautious than you were before. It could can the recession happen? Well, once again, things are getting worse and the probability are increasing. It's still low now. It's not. It doesn't imply that it's going to happen. But when we make some decisions, well, am I going? I am more likely to buy, I don't know, some Nvidia stocks now, or maybe I'm going to wait to see if I'm going to have a bigger pullback. So this is why, sometimes it's nice to have a general view of the finance of a country, and then after that you analyze the chart, and then you can time maybe better your entry or your exit point based on this general situation. And I do believe, Fibonacci and Elliott wave really changed my way of trading. And so I'm not saying it's the way, but it's a way. And for me, it works very, very well. And that's pretty much all I wanted to share with you guys. Hopefully you enjoyed the video. Please like, subscribe, and hit the notification bell. And have a good day. Bye.